Well, good day, traders and investors. My name is Roger Scott, and I'm the head trader for Wealth Press. Today is Wednesday. It's the 27th of January. It's the last week of January, and the markets are down. We're not in the middle. We're in the first part of the big flow of the earnings season. Last week, we started with 50 S&P 500 stocks. This week, we got 100. But we've got big names. Let me give you a good example so you could see. Meanwhile, so I don't have to go back to this page, Dow before the opening down 300, NASDAQ down 100, S&P, we are down across the board. Now, just to show you the type of numbers that are coming out, not the type of numbers that are coming out, the type of earnings that are coming out. This is today. What I'll do is I'll just organize it by volume so you could see what's on flow for the next few days. So look at this. You got Apple today. You've got AT&T today. You got American Airlines tomorrow. The day after, you got Carnival. You got Comcast tomorrow, Tesla today, Facebook today. It is going to be a very volatile day. You got Ericsson, Boeing. As you can see, this is going to be a very busy week. So far, well, let me go through the global economy and I'll tell you how things are going. The big reports for today. I'm sorry I'm jumping back and forth, but I want to kind of give you a really good idea of where we stand. So you may see me jump back and forth, but trust me, it will all make sense, especially if you've reviewed this video a few times. So today we have the FOMC announcement. It's happening today at 2 p.m. Yesterday we had the consumer confidence, which was slightly better than expected. So far, earnings are slightly coming out better than expected. Durable goods is coming out today, not expecting that to have a major impact. FOMC, typically it would have a major impact, not expecting it to have a major impact because COVID is driving this market, and we already know the Fed is not going to do anything for the foreseeable future. We may get some tidbits from their Fed conference that happens at 2:30, but if I had to guess, they're going to say, we're not going to lower or raise rates for the foreseeable future, kind of what they've been saying. Tomorrow, we've got the big report. We've got GDP and jobless claims. If the jobless claims report starts heading up to 1 million again, we're in deep doo-doo. If the GDP is low, we're in deep doo-doo. So tomorrow is going to be a very interesting day. Friday, not so much, because I think on Thursday we'll get a really good idea of where the economy stands, but we could see some surprises on Friday as well. Now, in terms of global economy, to give you an understanding why the market is right now, why did I do that? Let me go back here, and let me go back here. I have it all planned out before I start. So to give you an idea, again, the market is down quite a bit right now. And to give you an idea why the market's down so much, it's because of renewed fear of COVID, exactly what I thought was going to happen. And the problem is now they're saying the vaccines that are out may not work well or as well for the new variant as they did for the old variant. And that's going to put us in a huge pickle. Because what happens if people start getting sick again? They can't work. What happens to the GDP? What happens to retail sales? Remember, retail sales make up 2/3 of the GDP. So we are at a crest. We are literally at a crest for a tidal wave, okay? So let me talk about the news today, and I'll tell you what's on the horizon. Investors focused on Federal Reserve policy meeting. That's what I talked about today. That's happening at 2 o'clock. Fed is expected to keep its extremely supportive policy stance unchanged given the slow progress in vanquishing the pandemic. Vanquishing. Jeez, they should say vanishing instead of vanquishing. Markets have meandered since last week. They have, as investors weighted solid corporate earnings results against renewed worries at the trouble with the COVID-19 vaccine rollout and the spread of new variant of COVID might delay a recovery from the pandemic. Remember what I gave you, the scenario I gave you a month ago. It's the old James Bond scenario. You've got a madman with his hand on the nuclear missiles, and you've got James Bond coming to save the day. And if the madman presses the button faster, the world comes to an end. This is an example. I'm not saying the world's coming to an end. Don't get excited. But what I'm saying is, if we can't get this COVID vaccine, or if this COVID vaccine doesn't work well for the new variant, folks, we are screwed. I mean, screwed. So again, there's a new variant on the loose, and we don't know how well it's going to protect us. And we still have a record number of people dying from the first variant. This is not pretty. This is the busiest week for quarterly earning reports, as I showed you, which is not going to make as big of an impact because numbers are coming out on par. What's really driving this market is global economy and the vaccine and this variant. But the COVID is still driving this market. More than 100 companies in the S&P are scheduled to tell investors this week how they fared during the last 3 months of 2020. As a whole, write this number down. Analysts expect the companies to fall 5% from a year earlier. Remember, that's a moving target. That's a milder drop than the 9.4% they were expecting. But again, it's a moving target. It's gone now to 5% from 9.4%, but it's been moved. So again, it's based on what's happening right now. Keep your eye. If the number is better than 5% when it's all said and done, we'll know in about 3.5, 4.5 weeks, that should be a positive response. The fate of Biden's plan to send $1,400 to most Americans and deliver support for economy remains uncertain, given the slim majority of Democrats in the Senate. We're going to know more in the next few weeks ahead. Meanwhile, oil prices are moving higher. Again, as I mentioned, the big reports are the FOMC today. Expect partly subdued market. That's what we're usually seeing, but I don't think it's going to happen this time because we're in smack middle of earnings. Tomorrow's GDP and jobless claims. Jobless claims. Last time we came out at 900,000. The week before we came out 965,000. I'm hoping that the number is going to go down into the 4-week moving average of around 848 or 800,000. If it starts spiking to 1 million, our goose is cooked, I tell you. All right, now, here is my worry, and I've been telling you guys this for a while. This is the number of stocks trading above the 200-day moving average. The number is still going up. If you look here at this line right here, you will see that we haven't been to this level since right here, December 2009. We're talking like 11 years, 11-year high. Meanwhile, if you look at the number of stocks trading below the 50-day moving average, you will see that the number has actually been going down. Look at this. Notice? But here's the problem, and I mentioned this yesterday, and it's a big problem. Notice the number is going down. We had 88, 90% of stocks trading above, out of 100 stocks trading above the 50-day moving average. Now we have 71. But if you look at the QQQ, and this is really bothering me, you will see price is going higher. How can price continue to go higher if less stocks are trading higher? Remember, market capitalization. Some stocks have more veto power because they have larger capitalization, which is why we look at internals. But look at this. It's going up. Meanwhile, percentage of stocks trading above the 50-day moving average is moving down. Folks, that's called narrowing of momentum. And that is exactly what we saw. Also, higher price, lower RSI readings, exactly what we saw prior to the fall last time. So I am very, very nervous that the market is going to hit the 200-day moving average sooner than later and possibly go back into the twilight zone, which is somewhere between 300 and 270, probably around 280. Again, look for VIX, the volatility index, to start moving higher. It's already a bit higher. Let's look at the line chart. It's still relatively low, but it's at the 200-day moving average. It's moving higher, and I wouldn't be surprised to see it near 40 if the market continues breaking lower. Now, I've got two stocks that I believe are going to trade lower. These are big cap stocks. These are solid companies, but they're moving lower. And if the market moves lower, these stocks have lower relative strength than the stock market, so they should become weaker than the stock market. So if you're looking for a hedge, if you're looking for downside exposure, if you're looking for some stocks to hedge your portfolio, these may be good stocks. First one is Black Knight. Notice 200 Black Knight Inc. If you look at the profile of the stock, you will notice that it does prepackaged software for real estate industries, mortgage and real estate industries, and commercial real estate right now. Residential real estate is doing well, but commercial real estate is not. It's actually doing really, really bad. And this stock is sitting literally at the 200-day moving average. Look at that. Made all-time high right around, or a an all-time high right around, right about 2 months ago. Has started selling off, broke the 50-day moving average, and is now sitting at and just literally looking to break the 200-day moving average. And if this stock breaks, look where it can potentially go. It's at 80 right now. This sucker can go all the way to 50 or 70 or 60. But the bottom line is stocks are at all-time highs, and this sucker is breaking the 200-day moving average. That's not pleasant. That's not good. And remember, it deals with real estate. And real estate is right now, especially commercial real estate, it's not doing really well. My other stock is a defense stock, Lockheed Martin. Defensive stocks typically do better in a Republican environment, not in a Democratic environment. The stock made all-time high back in around beginning of the year, right when COVID first broke, beginning of last year when COVID first broke. It's been sitting, it couldn't go higher. And as soon as Biden started getting the lead on the White House, it started breaking lower. And as you can see here, it is now below its resistance level, long-term resistance level, which were right here around 340. Now it's at 328, and there's a good chance the stock is going to go to 260, especially if the market breaks a little bit or a lot, and if volatility rises. But again, BKI and LMT are good shorts. And folks, again, the reports you want to focus on tomorrow are the jobless claims and the GDP. GDP, I think, will be it's not really expected to be great, but if jobless claims are, remember, this is not really delayed. It's only a week delayed. So if new jobless claims start really spiking, we know that COVID is having a major impact on the workforce. And if it's having a major impact on the workforce, then we can be setting ourselves up for the exact same environment that we saw last February and March, but in a much worse position because the economy hasn't been doing well since that time. So be very, very cautious and be careful. Am I expecting a bear market? Absolutely not. Am I expecting a good, healthy, much needed shakeout? Absolutely. Now, imagine, folks, this is important, and this is a way to help you save your money, preserve your capital, make profits in every type of market environment. So please listen and listen good. Imagine the trading strategy so powerful, when applied accurately, it can give you a chance to trade with near perfect accuracy. Imagine 9 out of 10 winners, 8 out of 10 winners. That's scary good accuracy. Now, it may sound impossible, right? It's not. And for a limited time, you can learn about this strategy from a 10-time trading champion, Chuck Hughes, and how he used to profit from 97% of the positions he took over the past 2 years. Imagine, he's a heavyweight trading champion 10 times. I call him heavyweight trading champion because he's done it 10 times. So 10-time world trading champion, 97% of his positions profitable over the past 2 years. You've got to check it out. Don't miss on this opportunity to learn Chuck's trading secrets. You really owe it to yourself, and you're going to love this. Chuck is amazing. He's the guru's guru. I follow Chuck sometimes too. This guy knows what he's talking about. Click on the link below for complete details and learn from a 10-time champion, Chuck Hughes. I'll talk to you guys later. Post some feedback for me. How else am I going to know if you're getting something out of this? You got to tell me. Comments, post feedback. I'll respond, I promise. And have a great day. Bye, everyone.